Capital flight. Capital flight. Capital flight occurs when investors move money abroad. Capital flight occurs when investors move money abroad. Economic instability often triggers capital flight. Economic instability often triggers capital flight. Capital flight can harm a country's financial system. Capital flight can harm a country's financial system. Capital budgeting. Capital budgeting. Capital budgeting helps plan large investments. Capital budgeting helps plan large investments. Companies use capital budgeting to evaluate projects. Companies use capital budgeting to evaluate projects. Effective capital budgeting improves long-term growth. Effective capital budgeting improves long-term growth. Capital appreciation. Capital appreciation. Capital appreciation increases the value of investments. Capital appreciation increases the value of investments. Investors seek capital appreciation in the stock market. Investors seek capital appreciation in the stock market. Real estate often provides significant capital appreciation. Real estate often provides significant capital appreciation. Capital expenditure. Capital expenditure. Capital expenditure is used for long-term investments. Capital expenditure is used for long-term investments. The company's capital expenditure increased this year. The company's capital expenditure increased this year. High capital expenditure can strain cash flow. High capital expenditure can strain cash flow. Asset. Asset. An asset is anything of value owned by a business. An asset is anything of value owned by a business. The company's assets include property and equipment. The company's assets include property and equipment. Assets are critical for business operations. Assets are critical for business operations. Asset disposal. Asset disposal. Asset disposal helps companies manage unused resources. Asset disposal helps companies manage unused resources. The company plans to dispose of old equipment. The company plans to dispose of old equipment. Asset disposal can generate cash flow for reinvestment. Asset disposal can generate cash flow for reinvestment. Balance sheet. Balance sheet. A balance sheet shows a company's financial position. A balance sheet shows a company's financial position. The balance sheet lists assets, liabilities, and equity. The balance sheet lists assets, liabilities, and equity. The company's balance sheet reflects strong performance. The company's balance sheet reflects strong performance. Asset management. Asset management. Asset management involves overseeing investments. Asset management involves overseeing investments. The firm offers asset management services for clients. The firm offers asset management services for clients. Asset management is essential for wealth growth. Asset management is essential for wealth growth. Asset allocation. Asset allocation. Asset allocation diversifies investments to reduce risk. Asset allocation diversifies investments to reduce risk. A balanced asset allocation includes stocks and bonds. A balanced asset allocation includes stocks and bonds. Investors use asset allocation strategies for long-term success. Investors use asset allocation strategies for long-term success. Voluntary liquidation. Voluntary liquidation. Voluntary liquidation occurs when a company chooses to close. Voluntary liquidation occurs when a company chooses to close. Shareholders approve voluntary liquidation for a business. Shareholders approve voluntary liquidation for a business. Voluntary liquidation allows businesses to pay off debts. Voluntary liquidation allows businesses to pay off debts.